Hey guys, it's Sean at E-Mini School. It's April 24th, Saturday. I just want to do a weekend update real quick. So, looking at the 30-minute Euro Yen, let's look at the last move up. We'll also look back before what this long move. But on this last long move, there was a 35 pip stop. Okay, it ran for 214 pips. Now, I know that looking at charts, if you don't have a defined method of exit, you could always just go back and look at the top and say there was a 300 pip move or a 500 pip move. But we have a defined way of getting out of the trade. So looking back on this, if you had the system we use, you would have a very defined way of doing this. So using this chart, if we play the breakout here on the second set of greens, okay, price comes up, comes down, green bar, there's our long signal, defined stop right here. Okay, so we know the risk, so we know how much to trade depending on our risk tolerance. And bars stay green all the way up. Okay, so as soon as the blue bar comes in, okay, we're going to trail the stop to the low. Trail the stop, trail, trail. We would have been taken out right here. Okay, that was the high bar of the move. Yes, we did not get out at the very top. We got out here. So that is our signal. So when looking at charts, it's always, when you go back, you look at the potential of the run. Are you going to catch the whole run? No. But, you know, this could extend higher. But having a blue bar high, it could also come back down. So we don't want to just hold and hope. We want to be in the trade and out of the trade as quick as possible and have a defined way every single time to tell us to get in and to get out. So there was a very nice run, 35 pip stop, 214 pips to this exit. Okay, so that would look exactly the same on your chart. Now if we go back, we had a move down. Okay, blue bars caught this move down. I won't go over how many pips. You can see how the moves here. Pulls up, goes back to red. This is a very big bar. Okay, now 30-minute chart, maybe you're not going to use a 30-minute chart for the entry. So another thing I want to show in this video, other than just, the bigger moves, let's break it down to a 5-minute and look at this move. Okay, blue bars, indicator low, meaning big move is going to start. Okay, so we're breaking it down, only wanting to trade the 5-minute in the 30-minute direction. Okay, so here is our stop on the 30-minute chart, and here is the breakout long. Okay, so same labeled as the 30-minute. We're just breaking it down. Okay, blue bars give us a good indication on the 5-minute that the 30-minute is going to take off from this zone. So technically we could have gone in a little bit with less stop on the 5-minute. Okay, we could have got in right here on these blue bars. Actually, it would have been this blue bar right here, or a green bar right here. So the stop could have actually been, 15 pips. But let's just stick with the 30-minute entry, confirming with the 5-minute. Okay, so let's follow it. Moves up, indicator gets high, blue bar top. Same thing as the 30-minute. Trail it in, we would have got stopped right here. Okay, high bar. Pulls back, second green, there's our signal to go long again. So once that happens, we can now move our stop to here. Okay, we don't have to risk all the way back down. Okay, so we're moving with the market here, using the 5-minute to get odds on the smaller time frame. So let's say you missed that 30-minute entry or the first 5-minute entry here. Price comes up, good area to get out. Pulls back down, second set of greens go long, stop here. Blue bars come in again, indicator low, saying big move is going to happen. Rides up, indicator gets high. Trail it. Okay, let's make the bars a little bit bigger here. From here, rides up, trail it, we get stopped right here. Okay, that was high bar. It retraces, next buy signal. Move the stop, here. Okay, so we're moving with the market, haven't closed below the moving average. There's our next signal. Very tight stop here, 10, 12 pips. Okay, ride it up, and then it gets to the top. Okay, now if we're just looking at the 5-minute, we wouldn't know that this is the top. That's why we're using multiple time frames to get odds on the next time frame. So see how the 30-minute has blue bar and the indicator's high. Move is over. Okay, so if we would have got stopped on a 30-minute long, then we know not to enter the 5-minute on this pullback long, because 30-minute blue bar highs very relevant. 5-minute blue bar highs, we're going to get a pullback, but we can still buy on the next signal. This is signaling on a 5-minute chart that we're peaking on the 5-minute chart. The bigger the chart, the more relevant the buy signal, sell signal, or blue bars are. Okay, so that's why we want to use multiple time frames to gain odds on the next time frame. Since we're trading off the smaller time frame for the entry because we want the stops to be tight, the 30-minute chart or the 120-minute chart is going to give us the bigger odds. So just ask yourself, 30-minute blue bar high, that's important. Indicators high. This move most likely over. Would I take the smaller time frame long? Okay, let's say you miss this whole move. You just turn your computer on. You see we're up here. You know instantly what not to do, which is to go long, thinking we're going to break this. Could we? Yes. Odds are we don't. Okay, so we want to play the odds. So we would move on to another symbol to trade, or another contract, another stock, whatever, something that's actually setting up instead of forcing a trade on something that the trade is just completed. So just want to make a quick video on that. And if you guys want any specific videos, specific time frames, shoot me an email at trade@eminischool.com and I will do a video for you. Thanks. Have a good weekend.